Hello, everyone, and welcome to Philosophy Culture. I'm here as always with Mills. What's
What's
up,
up?
dude?
What's up? What's up? Costin.
Chillax. I'm Chillax. How are you doing?
Chillaxing as well.
Nice. Um, and yeah, today's episode will be about different markets, right? And
So,
which type of markets will we go through, Mills?
well, from the most heard of to the least heard of markets.
Yeah, good.
Basically, so from the stock market to the OTC market. Yeah. Uh, Nothing more to add, actually. Check it out.
Check it out. Check it out. Check it out.
Alrighty. Financial markets.
Yes.
All right. So
Um,
the classic question first. Why is this topic important?
that's a good question. Um, I would say it's important because you will by knowing different markets you will also gain more knowledge or of how to sort of diversify your portfolio and just become more aware of the different markets where you can trade financial assets, right?
Yeah.
Um, so I would say that would be like a central part of the whole like importance question. Um, and then last but not least, I guess just it's interesting to know more about the whole investing mechanism, the investing yeah concept.
Yeah,
So yeah.
for sure.
How about you? Why do you think this is important?
Well, for
Or
me, I like to, I don't know, I kind of look at financials as a puzzle. So I like to, I don't know, can I imagine uh, what what do you call it? Visually, like where everything sits. So yeah, I think it's important and really cool that we are now are going through these financial markets because that they are, as you said, like a mechanism of its own. Like, and they also contribute how we like how prices are set, and like there are like uh, a lot of things that kind of influence the economy as a whole almost. So
yeah,
it's really cool to look into this and also to become more financially savvy, of course, and to if we want to have a business in the future to have a uh, how should I say this, better business acumen. It's a phrase that I learned it this week. So yeah.
good. All right. Yeah.
Julio.
I like the puzzle concept about the financial and so on. Because yeah, it's truly a huge puzzle that you have to somehow figure out. Or at least try to connect all the pieces to get a better understanding of how everything works.
For sure, and like since also for me, and I think for many others, uh, like financials is pretty abstract at times, like with all these different concepts. So I think it's a good uh, mental model to kind of see it as a puzzle maybe, and or something like that. So yeah.
Absolutely. Good. So,
Oh,
shall we start with the definition then?
yeah. So I talked to ChatGPT before this episode. So maybe some things I say specifically needs to be taken with a bit of a grain of salt, but I think we should be good for the most part. All right, so a financial market is a marketplace where buyers and sellers trade financial instruments such as stocks, bonds, currencies, and derivatives. That is a word I'm gonna mess up a whole lot during this episode, so I will say excuse moi in advance. The derivatives, yeah. Investors, companies, and the governments raise capital, manage risks, and translate assets in these financial markets. And then these financial markets can also be classified into primary market and secondary market. And the primary market is where new securities or financial instruments are issued and sold for the first time. While the secondary market is where already issued financial instruments and securities are bought and sold among investors, basically. I hope
Exactly.
I
Yeah,
hope
I
it
got
sounds correct.
yeah, I mean it sounded very good. I got or I have the same sort of explanation to financial markets or yeah, definition. So yeah, I think it sounds great. Yeah.
All right, cool.
Yeah. And then we obviously have different financial markets, right? And we have gone through some of them in the previous episodes, and especially the episode about stocks and bonds and so on.
Yeah.
So yeah, shall we go through some of them, or yeah, maybe I don't think these are all of them, uh, but
Well,
I think
we have six, right? We have six financial markets that we are gonna bring up, and I think they are the most significant ones.
exactly yeah.
I would
Yeah.
dare to say. But yeah, first off, we have the stock market, right? Which we have kind of covered uh, extensively-ish when we have talked about different types of stocks and metrics and so on. So yeah, basically, it is where you trade stocks or shares, which are super small parts of a company, right? And a company does that to raise capital and yeah, so on.
Exactly. Yeah. Nothing more, nothing less to add. Or nothing less to add. I don't have anything more to add. Uh, but I mean, yeah, we have gone through, yeah, as we said, we have gone through this before. So I think uh, referring back to one of our to the episode about the stock market is a good option if you want to, investigate it more. Uh,
Yeah, yeah,
um, and on the second place, we would have the bond market, right?
yeah,
Which could also go under the name of debt market. And here is where the basically the bonds are traded, are issued and traded. And then comes the question, what are bonds? And bonds are basically a way the government could raise capital, or money for different projects or so on. So it's basically like I wouldn't say a share or yeah, I wouldn't say a share, but it's like, borrowing money to the government. Uh, yeah, so that would basically be it.
but
Uh,
like, does it need to be like? Does the government need to be involved? Couldn't the bond also be just in between a company and a investor?
yeah, that's what I'm wondering. Because in that case, I think Yeah, I'm wondering if you can call a because it feels like the bonds are specifically related to lending money to the government. Um, but yeah, maybe you could also call it for the, when you lend money to a corporation or a
Yeah.
yeah.
Well, here in my definition of the bond market, I have this sentence where uh, it is said that it is a debt security. So bonds are a debt security where an investor loans money to the government or any corporation in the place of a interest payment. So I guess corporations works as well.
Apparently, yeah. According to the article, I guess it would work.
Yeah.
Um, but it's yeah, yeah, yeah. I guess so. I guess so. Uh, so yeah, that would basically be it about the bonds, right? And I think we have covered this again in the episode about the stock market and bonds and mutual funds and so on.
Right.
So
Yeah, yeah. We have talked about bonds, right? Yeah.
yeah, yeah.
Because we haven't made a specific episode on bonds though, but
No,
we have talked about it.
exactly.
But all right. In the third place or third place, financial market number three, we're gonna cover is foreign exchange market or forex market, right?
Yep.
And which basically is a market where you trade different currencies, where you, I don't know, I guess you uh, can observe how all the currencies fluctuate uh, and yeah, invest or trade currencies to gain some kind of profit, some yeah, gain a profit, get a profit.
Yeah, I mean, I think there are, well, I don't know how many are actually trading currencies, but I think you can make a lot of profits if you actually know how to trade it and if you trade it with like a good starting amount. Because obviously, if you trade 1 euro to one Swedish crown, then you won't gain so much.
Yeah,
I mean, what would the profits be? But if you're starting with like, yeah, tens of thousands and, or I don't know, 100,000s or millions even, then I think uh, you may get like a really good reward if you know what you're doing. But I think this is much more complicated than the, regular stock trading, um, at least in my opinion. But that's maybe because I'm not so into this type of trading. But yeah,
yeah, yeah,
interesting.
yeah.
Yeah.
Sure. So yeah, that's basically it about the foreign exchange markets.
Yeah.
Thank you for listening.
Yeah. See you next episode. And the fourth one would be the commodity markets, right?
Yes, sir.
And here for the when it comes to commodities, we are referring to like raw materials and primary products. And I think this is also interesting because, usually when we are talking about the stock market, the foreign exchange, the bond markets, and so on, this is usually something virtual or something more abstract. You can't actually touch a, a share of a company, so to say. But when it comes to commodity markets, you can actually trade physically and virtually, right?
Yeah, yeah,
Uh, and yeah, uh, so yeah, you can trade everything from oil and to. I'm wondering. I think gold is also in here, right?
for sure.
Yeah,
Yeah,
gold, silver, and yeah, raw
precious
materials.
metals.
Yeah, exactly. Yeah,
For sure. But like when you invest. or trade these commodities virtually, I guess you follow some sort of value in index, right? That or I don't know. Uh, yeah. Well, when you trade or invest in these commodities physically, you own them, right? Like you can like buy a certain amount of gold and place it in a safe or something like that. So that would be my guess slash question.
Yeah, exactly. No, I agree with you. I think there may be some indexes that are actually following the gold standard or like the gold or having gold as the benchmark, if that would be the correct way to say it. Um, but yeah, as you said, yeah, it feels though like or I don't know if it's the most common way, but I think a lot of people are actually trading it, or like yeah, especially when it comes to gold, are actually trading it physically, right?
Yeah, yeah, yeah.
But yeah, hmm.
And I think you this will kind of go off topic a little, but I think it's uh I think I've heard that kind of is the same thing with cryptocurrencies as well, where you can invest in, let's say, Bitcoin, and then you own a little Bitcoin of yourself. Like, yeah, it's like, yeah. While you can also invest in Bitcoin, like, I guess this index,
Hmm.
which like follows the uh what do you call it?
The Bitcoin price index or like the Bitcoin price. Uh, the price. Yeah, I'm also having a huge blackout right now. Um,
But like, no, maybe this is the wrong term, but like, isn't it called a current? Where I don't know where the I'm thinking about the this line that indicates the how well the thing you are investing in is doing.
not
Isn't
100. No, I haven't heard about the current. Maybe it could be. Maybe it could be. I don't know.
well, okay, that's a parenthesis.
But
Uh,
it's like following. Yeah, it's like following it's following like the Bitcoin's ups and downs and evolution, so to say.
yeah, yeah, yeah.
Uh, hmm, yeah, that's interesting. But that's a question. Like, would the Bitcoin be considered a commodity,
Uh,
or under which um, market would this go? Feels like it should have its own market, like cryptocurrency market or something. Because I wouldn't put cryptocurrency as a like in the commodities, especially when it come on like
no, for sure, yeah. Uh, Wait, yeah, maybe we have missed a pretty significant financial market then. But like, even though you can invest in cryptocurrency on a stock exchange, right? That is possible, or at least in the cryptocurrency index that shows like how valuable the. I think that is a uh, a real possibility. Uh,
yeah,
while if you want to invest like in cryptocurrency, let's say Bitcoin again, which you want to own uh, physically, right? Like yeah, to put in your crypto wallet, then you have to go to other platforms like Binance and stuff like that to really. obtain a piece of the real cryptocurrency, which you then can pay with and so on.
Yeah. So I think they would have, in this case, their own market, right?
I'm not sure, but it makes sense. Well, this can be a
I mean, we had an episode about the cryptocurrencies.
yeah, yeah, yeah.
Um, oh yeah, I would put these as a separate market in this case.
All right, let's do it. So,
Okay, the next one.
so on the go, we're gonna add a seventh, or now it's gonna be the fifth market, right? Which is the the crypto market.
Exactly.
But all right, so so far we have covered the stock market, bond market, foreign exchange, commodity market, and the crypto market. And as a sixth market, we have my favorite word, derivative market. Oh, it came out good this time. All right. Which is basically, so the derivative market is a financial market where investors can buy and sell financial instruments. So keep that in mind to kind of have that as a basis for everything we're gonna explain later on, I guess, right? So I think that's a really important first sentence. That it's a market where investors can buy and sell and also trade financial instruments. The financial instruments include future contracts, options, or also option contracts, swaps or swap contracts. Wait, future contracts, option contracts, swap contracts, and forward contracts. So these are the four subsets, or yeah, in the derivatives market. And this is uh, almost the most complex or sophisticated of these financial markets. So it's gonna take a little longer to maybe explain the basic ins and outs of the derivative markets. But yeah, bear with us. We will try our best to cover now the subsets of the derivative market. So, like I said, it is the futures, options, swaps, and forwards, which you can basically trade. I hope that makes sense.
Yep.
Yeah. All right. So, do you want to jump in and cover one of these?
Sure. I can go ahead. Yeah, I think we will manage to do this pretty, or at least try to put it as simple as possible, right?
Yeah, yeah, yeah.
So if I try to differentiate between forwards and futures, it would be that a forward contract is a more private and cost what did I write? Customizable agreement that settles at the end of the agreement and is traded over the counter. And we will cover over the counter a bit later. But is basically a way of trading,
Yeah.
which is more decentralized. So it's actually just between two partners and there's no middleman, briefly said. And then we have the futures contract, which has where the terms are more standardized, right? And is traded on an exchange, for example, and the prices there are traded uh, or are settled daily, and can fluctuate.
Okay.
So
When you
yeah.
say, sorry that I cut you off,
Oh no, go ahead.
but when you said that the terms are standardized, what do they mean by that? Do you like?
I think there are already the two parts are actually have like predetermined what it is.
Okay.
like what they will actually, how should I say it? The both sides have actually agreed on what,
Certain
yeah,
things.
exactly. Yeah, on certain standards or on certain uh, oh, there was a good word for this. Or on certain standards, on certain agreements
Right. Right.
that the contract should include. So it's more
Yeah.
private.
Okay.
Meanwhile, futures contract is more standard, right? And it's more common, or like, yeah, standardized, uh, and not as private as the previous mentioned.
All right. All right.
Was it fuzzy or did it make sense somehow?
I think it was a bit fuzzy to be honest.
Okay,
But yeah, if you go back,
okay,
pause, and redigest what the
okay, yeah,
I think it
okay,
can make sense, but it makes sense also that it is a bit more like difficult to understand since it is yeah.
okay. So let's put it. Okay, so let's highlight the uh main points of each one. Okay, so when it comes to a forward contract, it's private
Yeah.
and it's more adaptable to different agreements, right?
Okay.
Uh, and it's also traded over the counter, so there is no middleman.
All right.
Meanwhile, a futures contract is more standardized and is traded on an exchange where there could be a middleman.
Right.
And here the prices are fluctuating depending on the daily settlement, so to say.
Right. Okay.
Yeah,
That was really good. Yeah.
yeah. And
All right.
that's that explanation is featured by Investopedia.
Yeah.
Yeah. So would you have the honor to explain options and swaps?
Yeah. Let's
Yeah.
give it a try.
Yeah.
So let's start off with swap contracts, which also can be called like swap markets, and that goes for all of these subsets in the derivative market, right? You can call all of these subsets a different type of market, like within the derivative market. So basically, the derivative market is basically a umbrella term, since you can't, from my understanding, you can't really just trade naked derivatives, right? It has to be within one of these four subsets, which you now covered. You covered the forwards and the futures contracts, and then now I will go and explain the swaps and the options, right?
I think there are different types of derivatives. That's the whole thing. Um,
Yeah,
so
that's basically what I'm. Yeah, or yeah.
yeah. Well, that if that's what you said, so yeah. Yeah.
uh, but yeah, all right. So the swaps are basically I will just say it as a market, right? So the swap market is a segment of the derivatives market where swaps are bought and sold. And a swap is a financial contract between two parties, or yeah, right. But is a financial contract between two parties to exchange cash flows or other financial instruments based on predetermined terms. And on Investopedia, they had this good video where they showed uh, where two companies had taken a loan, right? And one company had a better what was
Credit,
the
yeah, just credit. Let's say credit score.
yeah, credit score, right? Than the other. So there was two companies. One had better credit score. The other had a bit worse credit score.
Yeah, not as not as good as the first one.
Not as good, not as good. And basically, on this or through this market, they exchange their debts, which somehow benefited them both. I'm not sure I can go into the specifics, but yeah,
It was more the interest rate that they exchanged it, exchanged sort of.
right.
Yeah,
That's basically it. If you want to go uh, look it up for yourselves, you can go to Investopedia, type in I think it was what swaps are, right?
yeah,
Uh, and there is this cute little video where they explain the concept a bit
yeah. I also
more.
got the feeling that when this swap happens, like since there are like two parties involved, one one oh, how was this? There was a good explanation. Yeah, one cash flow is usually fixed, meanwhile the other is more variable. So for example, you mentioned the example with the two companies.
Yeah,
Since the one that has had worse credit score uh, got a higher interest rate.
right,
Uh,
right. Yeah, I forgot to mention that. Yeah,
yeah, they usually in the example that we watched, it was that apparently that interest rate was fixed, right? But since they swapped, now the company with
oh, right.
the
So the
now
company with the better credit score, when it
got
kind of gave its loan to the company with the less good credit score.
yeah, the interest rate, not the loan.
Interest rate, right. Okay,
Yeah,
so they only swapped interest rates. Well, yeah,
yeah,
right. They had loaned the same amount of money, right?
yeah, yeah. In this case, yeah,
Yeah.
yeah,
So it's basically they swapped. So one company had a 5% interest rate, and the other one, with the less good interest credit score, had a 6% interest rate. They
exactly.
swapped the interest rates. And so you mean that the credit or the loan with the 6% interest rate was a fixed interest rate,
Yeah, or at least that one. Apparently, that company had a fixed. They had a fixed interest rate for that loan, that specific
right?
loan. But
Right.
since they swapped the interest rate, now they got a lower interest rate because the higher interest rate went to the other company and they got the lower one. So now the company with a lower credit score got a lower interest rate, right? Because they swapped. Meanwhile, the company with the better interest rate, with the better credit score, got the higher interest rate.
Mm.
However, I don't know if they mentioned this in the video, but they saw it sort of a decrease, right? Because now, I mean, there should always be some kind of profitability between these swaps. Otherwise, what would be the meaning of them?
Exactly. Yeah, yeah. Yeah.
Uh,
And
so if that
so
other, yeah, go ahead.
the company that had the lower credit score, basically what it gained from the swap is that its credit score improved, or yeah, became higher, or it was just, yeah, it improved, so to say. And the company, what I didn't really understand this part, what the company who got the who swapped out its lower interest rate for a higher one, what they gained from that swap.
Yeah, I think they had a, yeah, that was also the, I assume, yeah, I assume for some reason that their interest rate was variable.
Right.
Variable. Very
Yeah, you
yeah,
said it right.
variable. It was yeah,
Very
it
well.
was varying. Because you saw in the video that then it decreased to 4%.
Right, right, right. Yeah,
Now,
yeah,
after it got the 6% interest rate from the other
yeah.
company, it decreased to 4.
Right.
So it was either that they had a variable interest rate or that it paid more interest for that specific loan, which eventually is beneficial because you will pay off your loan faster, right?
Yeah, and also I think it's a key thing to mention is that these swaps occur for a set amount of time. So they swap the
Yes.
so in this case, so in the swaps market, you can swap or it is most common that you swap interest rates, but then you can also swap other financial instruments, like I mentioned. But now in our example, we are talking about interest rates between two companies. And what did I want to say with this? No. Uh, no. God damn! I forgot what I was talking about.
You said about limited amount of time.
Right. So each of these swaps occur for set amount of time, and then they go back, right? So in the example of the companies, so the interest rate that went from 6% to 4%, it went back to the company with the less good credit score, right? Since the time period was over, I assume, right?
Yeah, the whole thing that we didn't see how for how long that that I mean we couldn't but it wasn't mentioned the period of time that that loan or like that swap occurred for, right? So we couldn't see what happened after the the swap was done. But as you said, I think there could be or there are like for a certain amount of time, and I think there could always be also be, for example, I mean, both parties could agree that we will do this for like 20 years until we have paid off our loan. I think. I
I'm
mean,
not I'm not sure, but yeah, maybe.
yeah, yeah. Uh, so yeah, it feels like it's determined by uh, the two parties that are actually doing the swap.
Right.
Uh,
All right, so that's basically the swap market, right? Within the derivatives market, where you basically can swap, exchange different financial instruments, right?
yeah.
And from this example, we hope that you gained a better understanding of the swap market thingy. And then now I will move on to the options market, which is the um, fourth subset of the derivatives market, which I think is the last one, or at least the last significant one that we know of. So the options market are basically financial derivatives that give the buyer the right to buy and sell underlying assets at a predetermined price within a specific period of time or a specific period. Yeah. Uh, yeah, I'm not sure if I can elaborate more on that actually. Uh,
I think I think it could be explained as I think a very a more basic example would be that it could occur, for example, on the stock market. So if you own any or stock market, let's say you own some stocks, and that specific company that you own shares or stocks in, uh, they have decided that they will issue some new stocks because they need to raise some capital. Uh, and since you're a shareholder, I mean, you own a share of the company, they would basically give you an option. So before they issue these new shares, they would basically give you the option to buy before they are actually issued at
Mm.
a lower price than what they would actually be issued at.
Oh, damn. Okay.
Uh, and that's again, that's what they are called options because they don't force you, so it's not mandatory to actually buy, but it's more of an option. So you have the right to do it, but you're not forced to do it.
Interesting. Okay. Okay.
Yeah.
Uh, but like we talked about earlier, the stocks when they are issued on the stock exchange, right? They go through this process called the IPO.
Yeah, that would be in the beginning. So that
Right.
would be like when the company is going or will issue shares for the first time.
Oh, so it okay. So that isn't the case when they want to issue more shares.
No, I mean they would obviously go through a process there as well, but that wouldn't be a IPO again.
Okay. Right. Okay. Okay. Right.
That's at least what I think. I mean, I haven't read that a company would have 2 or 3 IPOs.
Right. Yeah.
Yeah,
Makes sense. Makes sense.
yeah,
Okay,
um,
cool. I think that was a pretty good example that you gave.
yeah. I hope it.
But I assume it also could be like related to other types of assets as well, right? Besides shares.
Yeah, of course. Yeah,
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 okay. That's interesting. So I assume we're not gonna elaborate more on that, but it's an interesting thing to keep in mind, and maybe we will do a more in-depth episode on these markets. Or yeah. All right.
yeah. All right.
All right. So the last one.
The last one would be the over-the-counter market. Uh, but Emils and I have come to the sort of conclusion that this is more like we wouldn't call it a market, right? We would see it more of a way of actually trading different different financial instruments or
Yeah.
financial assets. So over the counter would basically be a way of trading financial instruments that occurs between two parties. That would, I think, a great example would be cryptocurrency, right? So there we don't have any middleman, but it occurs directly from A to B. Uh,
Right.
and yeah,
But I think it's important to kind of mention that, well, to maybe distinguish
mm,
that the cryptocurrency payments, so to say, which occur uh, through this decentralized way, it is made possible through the blockchain technology, right?
yeah, yeah,
But in this over-the-counter market or way of trading, we don't have a blockchain technology, and the trading basically occurs when the two parties are just in contact with each other, right? And gonna uh I think negotiate the different, what you call it, terms, no?
yeah, yeah,
And conditions, terms and conditions, for their trade, or yeah, for their exchange. So let's see if I have missed anything.
yeah. So uh, it says that forward contracts and swaps are example of such contracts. Over the counter
Yeah,
because it occurs only between two party and no middleman, and it's more decentralized also.
yeah. Well, From what I got from I think it is from ChatGPT, uh, is that the over-the-counter market is a decentralized market where financial instruments such as stocks, bonds, currencies, and derivatives are traded directly between two parties without the involvement of an exchange. In a OTC market, which is the abbreviation for over-the-counter market, OTC. So in an OTC market, buyers and sellers negotiate prices and terms directly with each other, often facilitated by brokers or dealers. The OTC market operates via electronic trading platforms or through direct communication between participants. In the context of derivatives, the OTC market plays a significant role. Many derivative products, such as swaps, forwards, and certain options, are commonly traded on the OTC market. Boom. Hope it was.
Period.
Huh?
Period.
Period.
Period. Yeah. No, I don't think. Yeah, no, that was a good. That was a good conclusion.
Okay.
Yeah.
All right.
Yeah.
Okay. So yeah, that is what I got from ChatGPT. Yeah, so that's what's up. Do you have anything more to, I don't know, more to add?
I don't actually. I don't. I would just say that I think the most common would be the stock market, bond market, commodity market. Uh, I think those markets are the most usual when it comes to, the population, like the general population. I think
Yeah,
they, yeah. So stocks, bonds, and gold or silver. Uh,
yeah. And
I think.
I would, yeah, go ahead.
No, no, no. Go ahead. Yeah, that was all.
Okay. No, like I would say that the stock market is the most talked about market, like
Yeah.
by a pretty large margin, I would almost say, because when you, I don't know, that is how I feel and kind of have, yeah, what I have noticed. But for sure, if you delve deeper into the financial world, you will, yeah, then also become familiar with the bonds market and the commodities and so on. But yeah, now you know many more markets than that. So yeah, uh, yeah. All right, guys. Thank you for listening to another episode of Philosophy Culture. We hope that you enjoyed this episode. And yeah, me and Kastin will put some links down below so you can check out more stuff for yourself. And other than that, we hope that you learned something about financial markets. And yeah, that this episode will help you navigate life's spin.
Exactly. And feel free to write in the comment section what you thought about this episode, or yeah, if you have a preferred market that you like to invest in. And besides that, don't hesitate to click on the follow button so that we could learn from each other and yeah,
Grow together.
grow together. Yeah, exactly. All right.
Okie dokie. Until
So,
next time.
adios.